Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra, and on this special edition, we are going to be focused on the upcoming IPO, and that is one of the most anticipated, the most talked about IPO, and that's Tata Technologies, the first one from the Tata Group to be coming after nearly 2 decades, is hitting the street. Tata Technologies, as you all know, is a global engineering services firm, and it's already raised about 791 odd crore rupees from 67 investors through the anchor book as of November 21st. And the company is now aiming to raise approximately 3,042 odd crore rupees through this IPO at the upper end of the price band. The offer is a complete offer for sale. The price band is 475 to 500 rupees per share. At the upper end, we also have seen that the company's valuation somewhere stands at 20,000 to 83 crores. And now to understand more details about the company, the business, and the outlook going forward, we have with us the top management of Tata Technologies. Warren Harris now joins in, the CEO and Managing Director at Tata Technologies with us. Welcome to Business Today Television, sir. Thank you so much for taking the time out.
Thank you, Sakshi, and thanks for your interest in our company.
Well, wonderful to have you with us. I was just discussing with you before we started off this show that, this has been one IPO that everybody has been waiting for right from the start of this year. And finally, it's hitting the street. I think every investor had been holding onto their cash just because they wanted to deploy their money to Tata Technologies. Tell us, what is the kind of experience that you've had so far with the kind of investors' interest that you've been seeing?
Yeah, it's been really gratifying and somewhat overwhelming. I think it's it's clearly a reflection in the interest in the sector. The Indian ER&D or engineering research and development sector is a sector that is fast growing, and it's made up of companies that have been relatively successful in the recent past. I think it's a testament to our value proposition. I think we represent a relatively unique value proposition. We are a dedicated engineering research and development company, but we're not an India out company. We practice a global proposition, and we undertake the type of complex work packages, particularly in and around our full vehicle capabilities. That's somewhat unique in India. So we think that the interest is a testament to that, but we also recognise that there is great trust in the Tata brand, and we feel a huge responsibility to reinforce that through the steps that we take as a company.
Absolutely. In fact, that was my next question. The last one from Tata Group's table was TCS, which is proven itself to be a great wealth creator for the group and also the shareholders at large, the investors community too. And for all of those who missed the entry points then, are now looking at this as a fresh opportunity for wealth creation that could happen over the next few years. Do you think the kind of responsibility that you have on your shoulders is too much to handle?
Big shoes to fill. That's for sure. But we've consistently, I think, built value for our existing shareholders. We expect to do that going forward. Where we again think we're in a great space. There's significant tailwinds for the overall market, for the companies that are based in India, and we think for Tata Technologies. And so we're going to do everything that we can to ensure that we provide a commendable return for those individuals and those institutional investors that commit themselves to investing in our company.
Well, all the best for that. And, just help us understand a little bit more about the company now for all the benefit of all our viewers as well. There are a bunch of technology-focused companies from the Tata stable. We already have TCS, which is software major, outsourcing major. Then we also have Tata Elxsi as well. How is Tata Technologies really going to be different? And what is the USP going to be? There is a lot of similarity that a lot of broking houses have drawn between Tata Elxsi and Tata Technologies. Is there a risk of one company cannibalizing on the business of the other? You must have heard about that already.
Of course, we've had many questions about that, and there's a couple of data points that I would point to reinforce our confidence that the market is big enough to enable the various group companies to grow and to continue to flourish. The addressable space for engineering service providers is about $100 billion, and the addressable space is growing at over 10%, and the space in India is growing at a faster rate than that. And so, we think that all companies in the Indian engineering research and development sector will has the potential to do well in the future. Our company is a company that provides end-to-end support for the product realization process of automotive companies, aerospace companies, and transport, construction, and heavy machinery companies. We believe, still the only Indian engineering service company that's been entrusted with the responsibility of a complete vehicle, and specifically an electric vehicle. And if you look at other companies, their focus is not end to end. It's typically on a discrete component of the value chain, and increasingly embedded electronics and software. We've got those capabilities, but we're in a position to be able to package that with mechanical systems, and again, develop the entire vehicle and help our customers launch that vehicle at their production facility in different parts of the world. So we believe that that's a difference that matters.
Fair enough. Tell us about, your key segments, key verticals that you work in, the kind of contribution that each of your verticals have in terms of revenue to your overall revenue basket. I remember reading that the revenue in FY22 from your automotive segment was somewhere to the tune of 64-65% odd. How is it really split between all of your segments, and where do you see it going forward?
We are first and foremost a dedicated automotive engineering service provider. 90% of our services revenue today is delivered to the automotive or to the broader mobility sector. But we have a laser sharp focus on growing in aerospace and also in transport, construction, and heavy machinery. If you look at our aerospace business, we were impaneled by Airbus some 18 months ago. We've been building up an order book on both sides of our value proposition, on both the product engineering and also the digital side of our value proposition. And we've also been rolling out IT systems and opening offices in Toulouse and Hamburg to discharge an order book that has grown somewhat exponentially in the 18 months since we've been impaneled. So we're bullish about growth there. We're also bullish about the tailwinds that the group has provided. The investment in Air India, the procurement of 470 single aisle and wide body aircraft, that's providing the group now with a great deal of influence. And those tailwinds we expect to intersect with going forward. So we're 90-10 at the moment. In 3 to 5 years' time, we would expect our business in aerospace and transport, construction, and heavy machinery to grow at a faster rate than automotive, and we would expect our revenues across the different industry verticals that we support to be somewhat more balanced.
Okay. The other concern some of the top analysts have pointed out is the significant revenue concentration from the parent company, Tata Motors, in your overall basket as well. Is that a risk that you see? And, do you think that the portion of revenue contribution from there could come down and you could increase it with the other companies going forward?
We think it's a strength. And I don't say that for effect. If you look at our revenues 10 years ago, the majority of our services was delivered to Tata Motors and to JLR. Last year, at an aggregate revenue level, it was less than 33%. But if you look at what those customers mean to us, not only do they provide volume for us, around which we built the business and continue to build the business, but they allow us to incubate skills and capability, and test and validate our IP and our value proposition at scale. And one of the things that we do in India specifically is we rotate our graduates through the production facility at Tata Motors. So we're able to expose our graduates not just to the digital representation of the product, but also the physical manifestation of that product. That type of experience is unique to Tata Technologies, and that's enabled because of our parent and JLR. So those relationships do not represent the client concentration risk that they're used to, but they continue to be incredibly strategic for us.
Okay, but there isn't any operational influence, so to speak, when it comes to the kind of certain business that you need to do with the parent company, is there?
Absolutely not. We compete as hard at Tata Motors and at JLR for new business as we do outside of the group.
Okay. How do you really see demand shaping up? You talked about, tailwinds emerging from both the aviation space as well as the electric vehicle space. How is the demand, outlook right now in these two key verticals? Because, of course, for both these spaces, we've already seen, the worst patch during COVID-19. Then there was the issue of supply chains, of semiconductors. How do you really see the demand shaping up going forward from here, from these two key verticals?
Well, if you look at automotive, we're going through a once in a generation transformation. As the industry pivots around the move to autonomous driving, to connected services, to the move to alternative propulsion systems, and specifically electrified propulsion systems, and the move to shared mobility. The industry is embracing technology in a way that it really hasn't since the outset of cars more than 120 years ago. That is providing significant growth, and we believe that we're at the beginning of the journey as far as that is concerned. We believe, Tata Technologies, that we're in an ideal position. One, because we have a balanced onshore offshore proposition, so we've really developed customer intimacy with the customers that we work with. We also have been in the electrification journey since the outset. One of the things that we did in 2012 was reveal an electric vehicle concept model at the International Automotive Show in Detroit, and that was the same show that Elon Musk revealed the Model S for the first time. So we've been part of the electrification journey right since the beginning. So we think that the industry is going to provide opportunity, that we think we're ideally positioned. If you look at aerospace, today there's about 22,000 commercial aircraft in productive use. In the next 20 years, that's likely to more than double, and the demand is going to come from Asia, and specifically countries like India. We think the group is going to play a big part in the growth that aerospace will represent in India over the next 20 years. We think those tailwinds position great opportunity for a company like us that's been accredited not just in India, but by a great company like Airbus.
Absolutely. And at the point, just help me understand, what is the geographical contribution to your overall revenue right now? I believe as the India portion is about 30-odd%, or am I wrong there?
We have a very, very balanced geographical split in terms of revenue, and I think we're going to work hard to maintain that balance. India is about 30%, and we have a critical mass of revenue: Europe, North America, and also in Asia outside of India.
Okay. And do you see that division likely to remain the same for some more time?
I do. I think we'll see growth rates in different regions ebb and flow. We're seeing a significant amount of investment in electric vehicles in Europe at the moment, as the traditional OEMs look to play catch up with new energy vehicle companies. And so we're very focused upon harvesting that opportunity in the likes of the UK, France, and Germany. But we see opportunity across the board, across different geographies. North America continues to be an exciting area for us, not just in Detroit, but also on the West Coast. We have a significant presence in China. We've established our credentials with partnerships with companies like NIO, and we expect to not only continue to play a role in China as that market continues to go from strength to strength, but we also expect to be able to capitalize the experience there and leverage that for other parts of the world.
Fair enough, sir. Let's talk financials now. The company saw revenues grow by 25 odd percent to 4,414 crores for the period ending FY23. The profit after tax for you grew by 42.8% to 624 crores again for FY23. For the first half of this year, financial year, until September of 2023, you've recorded a revenue of 2526 odd crore rupees, 2526 odd crore rupees, and the profits of 351 odd crore rupees. Could you give us a guideline as far as your top line, your bottom line is concerned, as well as your margin growth? Where do you see that going forward?
Well, we don't provide specific guidance, but the momentum that we've established inside of the company, we would expect to continue. I think growth rates we're somewhat generous after we bounced back from COVID, so we would expect that to be somewhat less generous in the next couple of years. But we think the growth rates are sustainable. As far as margins are concerned, we some 4 years ago we were at 16.5%. We've improved margins to the tune of over 300 basis points. I think we'll see incremental improvement in the next couple of years, primarily through offshore levers like or through operational efficiency levers like offshoring. Today, unlike many of our peers in India, our onshore offshore revenues are relatively balanced. It's close to 50-50. Given our value proposition, we expect to get to about 65-70% offshoring in the future, and that will have an impact upon improving margins. But we never expect to get to the sort of 90-10 or 80-20, because our onshore presence will play an important role in fulfilling the value proposition that we represent, particularly as it pertains to full vehicles.
Okay. My last question to you would be on the future growth strategies, on your expansion plans as well. Would you be looking at more organic or more inorganic growth opportunities? Which are the key business segments that you're maybe looking to scale your business, and via which route?
I think we're very focused on our organic strategy. I think if we look at our organic strategy, we want to go deeper and wider within the customer base that we currently support. About 98% of our business is repeat business, and so we want to maximize the contribution that represents. We're targeting the top R&D spenders as far as new logos are concerned. We want to work with those companies that have the capability to scale with the ambitions that we've got as an organization. We are investing very heavily in technology, and specifically software and software-defined vehicles. And we're also investing in the delivery infrastructure that connects the 19 delivery centers that we've got in different parts of the world. So we've got a laser-sharp focus on executing that organic plan. But we've bought companies in the past. We know how to do it. We're going to be thoughtful, but where it makes sense in terms of accelerating capability or entering a new customer, we'll be open to that. And we've got a balance sheet that is debt-free. We've got a healthy cash position on the balance sheet, and so when it makes sense, we've got the capabilities to be able to execute on a transaction when it makes sense.
Is defense an area of interest when it comes to inorganic opportunities?
Well, I think if you look at our commercial truck business and you look at aerospace, there are dual use systems across commercial and defense, and some of the platforms on the commercial truck side of things have been used for land systems, and so we will work with our customers in the defense area, but it is a small part of our business. Most of the work that we do is not related in any way to the military.
All right, fair enough. Well, I'll rest my questions right there. But many thanks for giving us all those valuable insights about your business and your outlook. I give you all my best wishes for this IPO as well. And here's hoping for more interactions to gather more information from you about the business, which can give a lot of valuable insights to all our viewers as well.
I look forward to it. And thanks again for your interest in our company. Thank you.
Many thanks, Mr. Harris, for being with us on Business Today Television. It was great speaking with you.